Hey guys, welcome back. I hope you had a really great weekend. So last week I was sick with COVID. I didn't know I had COVID until later in the week, but it ended up explaining why I had no energy and I couldn't make any videos. But I'm back, and the only thing is that last week I almost spent no time looking at the charts. So I'm going to do a very rough read of what happened last week and leading up to last week so that we have a place to start for tomorrow. And I know I'm going to miss a ton of stuff. I know we had a ton of big earnings and I completely missed all that. But that's okay. I'm going to work with what I have. And last week we started SPY right here. And leading up to that point, we were making lower lows and we were finding support on the 30-minute 200 moving average. So that takes us to last Monday right here where we gapped up. And Monday, Tuesday, and a part of Wednesday, we traded up to this downtrend line, and then we got a big resistance there. We got hit back underneath the 30-minute 200 moving average. The following day we gapped down, and that gave us the bearish signal right here where that 35 EMA came underneath the 30-minute 200 moving average. We gapped down on Thursday, and then we dropped. Friday we bounced on the 50-day moving average, brought it back up to the 35 EMA. And like it typically does, when it does cross underneath the 30-minute 200 moving average, it turns into a resistance. That is exactly what happened. Rejected right at the 35 EMA to close the week. Now you can also see right here the 1 hour 200 moving average was there as well. So that 35 EMA plus the 1 hour 200 moving average right here pushed us back down, and we are starting election week right above the 50-day moving average. So then SPX, same thing over here. Last week we opened with a gap up, and then we traded up to the downtrend right here, and we got hit at that level, dropped back underneath the 30-minute 200 moving average, and you could see that 35 EMA was struggling to hold that 30-minute 200 moving average level, and that brought it under. We got a cross down right here, a bearish cross down, and closed underneath on Wednesday, and then gapped down on Thursday, dropped down to the 50-day moving average on Friday, and bounced back up to the 35 EMA, and that 35 EMA did hit us as resistance. Now we got a bearish cross down right here on Thursday. On the 30-minute time frame, we have another one right here. I'm going to switch to the 1 hour time frame. So the 1 hour time frame, now we do need to see a follow through here because we could bounce, but the 1 hour time frame, the 35 EMA just crossed underneath the 1 hour 200 moving average. So bearish right here on the 30-minute time frame. And the move was big enough to give us a bearish cross down on the 1 hour time frame. All right, so a pretty decent down week in SPY and SPX. Let's take it back to the 30-minute time frame and then over to QQQ. Last week we opened right here, and prior to that we were seeing 500 as a resistance level right here. So we were trading sideways, seeing the 30-minute 200 moving average as support for the most part. We did drop underneath here, but for the most part seeing that 30-minute 200 moving average as a support and 500 as resistance. So we opened right here on Monday with a gap up, didn't quite make it to that first resistance level before getting pushed down, found a little support on the 35 EMA and made a real attempt to get above 500. But that level did not hold, and we saw a ton of selling pressure there. We gapped down on Thursday, and we gapped underneath this up gap from the previous week, and we dropped down, not quite down to the 50-day moving average, but we got pretty close before coming back up, and that 35 EMA, once it crossed underneath the 30-minute 200 moving average, becomes a resistance level. So 35 EMA on the 30-minute time frame right here, and then we also have the 1 hour 200 moving average right here. So double resistances right here, which pushed us down into the end of the week. So the past few weeks making lower lows, and we made it down to the 50-day moving average. So starting election week here as well at the 50-day moving average. So we are starting the week here with an island top, which I don't have the red gap right here, the bear gap put in right now, but I will before we get into tomorrow's trading range. But we do have an island top above us and a bearish signal to start the week. And then taking it over to IWM, last week we did open the week right here, and we did start with a gap up on Monday right here and a pretty big up day. Tuesday we gapped down, and this was the last chart I posted for IWM, and it did take it down to the bottom of the implied move right here before coming back up. So we stayed above this up gap from Monday on Tuesday. Wednesday, we popped up. We hit a resistance midway up the implied move, and I'm not sure what was here. Again, last week I spent no time in front of the chart. So 225 right here. This is a level where we did see resistance previously. Right here, that's actually a pretty big level. If I zoom out a little bit here, let's go to, there you go. So resistance right here at 225. Even before we hit that level, we started seeing selling. So 225 right here pushed us down all the way down to the 50-day moving average. So that seems to be the common thread right now across the indices, is that we are right near 50-day moving average. In IWM, we're right at it. In QQQ, we're a little bit above. SPX, SPY, we saw it bounce at that level last week. But 50-day moving average across the board seems to be an important level. And last week, if you were just watching the moving averages, the 35 EMA was bearish for most of the week. It got back above with this pop up and then rejected back down. And then after it did cross back underneath the 30-minute 200 moving average, right here, resistance, and also that 1 hour 200 moving average, resistance here as well. That is also common across QQQ, SPX, and now here in IWM, that 35 EMA plus the 1 hour 200 moving average. So a down week for IWM. And then let's take a look at DIA. DIA opened right here on Monday, and prior to that we were seeing lower lows and lower highs leading into Monday. So we did open with a gap up, hit that 35 EMA. We're already bearish, so that 35 EMA was an easy resistance level, and that level stayed as a resistance into the week. We dropped down to the 50-day moving average, got a little bit underneath it, but got this gap right here. Let's see if I can see where that gap leads. That is the FOMC rate cut gap. So we brought it all the way back down to this level, which was a previous support. You could see after that rate cut up gap, it held as support here, 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 and here, and that is where we dropped it into last week, just underneath the 50-day moving average. So that level is there again as well. And here also we are underneath the 1 hour 200 moving average. So on all of these indices, we are on the 2 hour time frame. That is what the 50-day moving average points to. I know that if you're new, maybe you don't know, but the 2 hour 200 moving average is the same level as the 50-day moving average. You can see that right here. See that this is the 2 hour time frame. This blue line is the 2 hour 200 moving average. That 50-day moving average is right there. So this is the time frame we are on, and it looks like we have a little bit of a cross up to the green side here. We may bounce here. So 50-day moving average, super important level. So there we go. That was last week. I know that was a really, really rough read. I was not in front of my computer. I was watching movies all week. It was the weirdest week. It's been years since I have been away from the charts for that long, and it was actually my first time having COVID. So I can tell you for a fact that the brain fog is real. And I'm definitely working on getting my voice back 100%. but it is good enough. So that was last week. Let's move over to next week and check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. Or if you just want to say hi, leave me a comment. And if you want to support the growth of my channel and you took a really awesome trade based on something I said or something I taught you, then don't be afraid of that thank you button. That goes right back into helping me grow my channel, and I appreciate everyone that has supported so far. Alright, so starting in SPY, tomorrow's implied move is between 566 and 576, and that is from options. That is lined up exactly with the 30-day average volatility, and the implied move on Tuesday's contract, election day, is 565 to 577. So the market is not expecting a huge amount of volatility for the next 2 days. It's lined up right with the 30-day average volatility, which makes me believe that we are waiting for the results of the election before making the next move. Now, I'm going to bring this in just a little bit, and I have the implied move for the entire week marked here as well. So this is on Friday's contract. The implied move on that contract is much bigger. It's 556 to 587. But as far as the next 2 days go, there's not a huge amount of volatility, at least not that's written in options. So to the upside, the first level to look for is going to be the 35 EMA. It's right above us, and this level was resistance on Friday. After we saw that big drop, that big gap down, we swung back up after hitting the 50-day moving average, and that 35 EMA was resistance, and a very clean resistance too. And right above that, we do have the top of the implied move at 576, and the 1 hour 200 moving average, which was also resistance right here on Friday, is right above that in this down gap from last week. And then the top of this down gap is at 580, even though that's not within the trading range for tomorrow. So 577, top of the implied move on Tuesday's contract. And then to the downside, we do have the 50-day moving average, really big level that is also the 2 hour 200 moving average. And we did see that as support on Friday. It is just my guess that we see this 50-day moving average as support until after the election. If we do break that, the bottom of the implied move for tomorrow is 566 and 565 on Tuesday's contract. So right here, if we do trade up tomorrow, I would be comfortable enough to go into 576, 577 bear call spreads at the top, and 566, 565 bull put spreads at the bottom. I do think we're going to stay in range. This gap right here, that is from the FOMC rate cut. That was when we got our first rate cut, and this gap has acted as a support ever since. I do think that for the next 2 days we will probably stay above that, which is why I think on a drop this would be a nice spread. We also have this down gap from last week at the top of the trading range with this 1 hour 200 moving average, which was resistance, which is why I think 576, 577 would be a good spread for tomorrow. Now, I trade SPX, so same thing over here. The implied move for tomorrow is between 56.85 and 57.75. That is from options. The 30-day average volatility is pretty much lined right up with that. You can see it's a little bit wider, but we're going to call it 56.85 to 57.75. And on Tuesday's contract, 56.65 to 57.90. And to the upside, that 35 EMA is right above us. And last Friday, that was resistance. The top of the implied move at 57.75 was where we gapped down to, but that also was a previous support. So we have a pivot support turned resistance right at that level. So 57.75, and then above that, the 1 hour 200 moving average, that level we did see as resistance right here with that 35 EMA. And then 57.90 is the top of the implied move on Tuesday's contract. So in SPX, since this is a $15 difference between the strikes here, I would probably choose 57.80, 57.90 as the strikes that I look to sell for tomorrow if we do pop, especially if we get near the top of the implied move. And then to the downside, we have that 50-day moving average right here. And that is also the 2 hour 200 moving average. So we are bearish on the 30-minute time frame, the 1 hour time frame, but that we are on the 2 hour time frame. So this 50-day moving average could hold us up. I do think it probably will into the next 2 days until after the election. Bottom of the implied move for tomorrow is 56.85. And 56.65 on Tuesday's contract, and this is actually a $20 move right here. So if we do drop and get near the bottom of the implied move for tomorrow, then I would probably look to 56.75, 56.65 spreads down near Tuesday's bottom of the implied move. And then this gap right here, that is also the gap from FOMC where we got the rate cut. That was back in mid-September, and we have been staying above that gap. So for the next 2 days, I again think that we will probably stay above that gap. And then post-election, we might test that. In fact, I think it's likely after the election that we do test this gap, and the bottom of that gap is 56.15. So pretty easy trading range for tomorrow, nothing too crazy. And then QQQ, the implied move over here for tomorrow is between 482 and 493, and that is from options. The 30-day average volatility lines right up with that as well. So we're looking at average volatility tomorrow, nothing too crazy. And then the implied move on Tuesday's contract, 480 to 494. To the upside, the first level to look for is going to be this 35 EMA, and this did act as a combo resistance right here with that 1 hour 200 moving average. So if we do get above this 35 EMA, look to this as a resistance. There is still some positive momentum here. It did start turning, but it's still pointing up, but the time frame above it, the 30-minute 200 moving average right here, is pointing down. All right, so let me backtrack just a second here. 35 EMA, and then if we get above that, 1 hour 200 moving average, and if we get above that, the implied move for tomorrow is 493. The top of the implied move on Tuesday's contract is 494 with that downward momentum 30-minute 200 moving average. So if we get to the top of the trading range tomorrow, 493, 494 bear call spreads look very attractive, especially since that is a island top gap, which means this up gap and this down gap, and where they overlap is typically a battle zone, and that is a bearish signal. So 493, 494 look good to the top, and to the downside, we do have support right here at 483. That's where we bounced on Friday before seeing that bearish rejection right here at that 35 EMA. So we bounced at 483. You can call it 484 if you want. It's close to that. And if that breaks, 482 is the bottom of the implied move. 50-day moving average, that's a huge level. In my opinion, we probably stay above it in the next 2 days. And then 480 is the bottom of the implied move on Tuesday's contract. We also have the 4 hour 200 moving average, which we are quite a bit overdue in touching down with, but we definitely don't need to see it in the next 2 days. This is not in the trading range for the next 2 days, but it is in the implied move for the week. Again, I did a reading on Friday's contract, so 470 to 505 is the trading range for the entire week, even though this is for the next 2 days. So if you're looking for some wild targets for post-election, 470 would be a bearish target, and that would take it to the bottom of the FOMC rate cut gap right here. And then 505 right here, I think that takes it to all-time highs. So we have a really interesting trading range. Yep, all-time highs are at 503.52. So 505 being the top of the implied move for the week would take us to all-time highs if that's the momentum we do take. So that is the trading range for the next 2 days in QQQ. Let me zoom in a little bit here and just make sure that is everything. I do believe so. Again, not a crazy trading range over here. We are starting to see some downward momentum towards the top of the implied move here. And then underneath we have the 50-day, which is still moving up. Momentum is not crazy strong, but it is still positive. And then another positive momentum just underneath that if we do fall. So then IWM has a implied move tomorrow of 216 to 222, and that is from options. 30-day average volatility perfectly lines right up with that. I don't know how that's happening across the board, but looks like we're having average volatility tomorrow from what we've been seeing in the past 30 days. Nothing too crazy. And 215 to 213 is on Tuesday's contract. To the upside, we do have the 35 EMA right here with the 1 hour 200 moving average. Both of those levels were resistance on Friday. Those are our first two levels. If we get above that, then 222 is the top of the implied move for tomorrow. We have that 30-minute 200 moving average. The momentum did shift down. And then 223 is the top of the implied move on Tuesday's contract. Again, 222, 223 almost looks perfectly set up with that 30-minute 200 moving average for a spread. And if you even want to get outside of that moving average, then 223, 224 would be a good spread if we make it near the top here. And then to the downside, we have the 50-day moving average that did catch us last week. It also caught us the week before that. So this right here, important level, and in my opinion, we hold this for the next 2 days, and then once we see what happens over the election period, then we will probably see this as a make it or break it level. So 50-day moving average just underneath us, it is still pointing up, though just above that we have the 1 hour that is tilting down slightly and the 30-minute that is pointing down as well. So sluggish momentum on the upside of the trading range, slightly up right here, and then underneath we really don't have anything until the 4 hour 200 moving average, which is going to be right here in this FOMC rate cut gap. And for the 5-day volatility, so I did the reading on Friday's contract, and 5-day volatility makes the implied move for the week between 209 and 229. So that's a pretty significant move. That does take us to some interesting resistances to the upside and some supports to the downside. This 211 level, which we did break out earlier in the year, is within the trading range for the week. So next 2 days, not necessarily wide trading ranges. Towards the end of the week, we're looking at much wider targets. And then lastly, DIA. So DIA is our weekly contract. We don't have daily contracts over here, so we just have the weekly implied move. And you could tell it's pretty wide compared to what we've seen in the past few weeks. And we are right on that 50-day moving average. The 1 hour is sideways completely, so if we do bounce, don't expect to fly above that level. It's likely we stay flat and trade between these levels until we either turn the 1 hour or break underneath the 50-day moving average. So we did chip right into the FOMC rate cut gap on Friday. So we are testing that right now. 35 EMA is right above where we closed. We have been chopping around it. It has been acting as a resistance for the most part. We did get above it a little bit, a few fake outs here, but kept getting pulled back down. So 35 EMA right above us. If we do get above that, the 1 hour 200 moving average, which we've seen a bit of resistance here around that level, and that is flat. So don't expect to go super flying above that, zooming past that level. We are flat here. And then directly above that, the momentum is giving us some bearish pressure as well. So if we do get above those levels though, anything's possible. It's a wild week this week, and we do have this down gap from last week right here. This was Monday going into Tuesday. We gapped down. We got underneath this previous support here and we dropped. So bottom of this gap is at 427. Top of this gap, which would be the resistance for this gap, is at 429. And then we have the top of the implied move for the week is 432. So really the big thing here is, do we hold the 50-day moving average? If not, we're going to be testing this FOMC rate cut gap, and the bottom of that gap is at 416. This bottom of this gap is at 414, and this was the day before the rate cut and then after. So really we could call that just one gap, but it did happen 2 separate days, and it did turn this resistance into a support. So that's 414. If that breaks, we do have a hidden level right here at 411, and that is this up gap right here. And then 409 is the bottom of the implied move for the week. So if we do drop towards the end of the week, I would think that 409 would be a great place to go very short-term long within this week's contract. So there you have it, guys. It is really good to be back, and I'm super excited to be trading again tomorrow. And don't get COVID if you can help it. It sucks. And don't forget to go vote, and let me know if you did vote down below. I don't care who you voted for, just write I voted, and let's see what happens this week. It is a historical week, and let's see how the market reacts. Have fun, trade safe, make sure you guys take profits when you're up, and I will see you guys tomorrow night.